The following is a presentation of TFNN. It is now time for the Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi, folks. Basil Chapman, and let me just post this to the den just to tell this person tell Mr. Bill who was singing in the little break beforehand. Okay, so thank you, Steve Rhodes, for 2 great hours discussing the markets in terms of his techniques. And as you know, here at TFNN, we do our absolute best to be able to enlighten you to various possibilities and how we look at the markets, etc. And I come in here at 11 o'clock till noon, Tiger Technicians Hour, Monday through Friday, as long as the market is open. I'll be here. And in fact, I will be doing Larry's show today, and I'll do it until 12:50, and then I do have to leave a tad early, so the last segment won't be live, but the rest will be. And let's go straight to the markets. We've got the Dow up 99. Hey, wait a minute. It's not good enough just to say Dow up 99. The Dow is trading at an all-time high, I believe, 16,631. Yep, we hit 16,695 in leg C in the daily chart. That says that there should still be a leg D to come. I'll explain this whole thing as we move along. And what's important about this is actually what you're looking at Tiger. Let me get to it myself so we can be looking at apples to apples. Educating investors. I'm going to go straight to the home page right here, home page. Click, get Tiger TV on your handheld. Well, I'm getting on my laptop, click, and within a split second, what do we have? Yep, there it is. All right, so you can see the black background chart. The upper left has the Dow 120-minute chart, and it shows you the number of times that the 200-period exponential moving average was tested successfully, and then the Dow spiked up. More importantly, the volatility index this morning went to 1188, I think it was. What did it go to? 11.88. I mean, come on. If ever there was buying pressure, make it simple. That's the buying pressure. That's the lower left quintile. And what's important about this is that the arch formation in the Dow has now broken to a cup formation with this move up. It's very important. And that suggests higher highs to come this week. And the lower lows, we get rid of this one over here, says, oh, watch out. We now have an arch formation forming. But at the same time, I'm getting signals that say we're getting real close to some kind of a pullback. Now, what's fascinating about this question of the Den Gringo is it time to buy the VXX? I have said that if you, number one, if you have a portfolio that you are trying to preserve because you'd like to keep your long positions, you're prepared for some kind of a pullback, but they were bought at a really nice entry point and you want to maintain them, then I don't believe that having a little bit of a VIX is a problem. I think that as insurance, but I would only increase it a little later in the week. Or I'd only start it actually a little later in the week. Why? Let me get to that in a moment. So the answer is, if you want to nibble here, that's fine. But I do believe we're going to make higher highs this week. And I'll explain the only reason why I think that's going to be. Meantime, back to the ranch, I have a signal that says, it's a proprietary Chapman wave signal. It says that tomorrow, regardless of where the E-minis are, that's the S&P futures, wherever they are tonight or early in tomorrow morning, there should be some pullback that takes the Dow into minus territory. And that is really important to know. Why? Because if you're still wanting to play some of the upside, you'll have an opportunity to get a position tomorrow. If you're looking to short, it says that the pullback tomorrow is probably not the one that you want to short. You could start the position, but that's not really where you want them. I don't have a signal yet. So this is leg D in the Dow. We are only now at this very moment with a move to 1893.81. I believe that is, in fact, 1897. We are still underneath. We have not yet made leg C in, no, let me go back. I'm sorry. I'm going to do this again. The S&P, I need to go to this chart right here. The E-minis are in leg C. They're in leg C in the daily. They're in leg C in the Chapman wave in the 120. Let me just quickly explain what I'm talking about. The premise of the Chapman wave methodology is to choose and identify the lowest, most obvious left side low bar and start your wave count from there. And that wave count should simply be each higher successively higher peak gets labeled peak A, uppercase, peak B, uppercase, higher high than peak B by even a penny, in this case 25 cents, goes to leg C, which is where we are right now. I'm anticipating that there's a pullback, maybe tomorrow, but maybe the pullback's tomorrow, and then we still go to recovery highs. Whatever it is, when we get to leg D, that's where you've got to be careful. And 1892.50 was the E-mini high. The S&P, SPX is trading right now. SPX.X trading at 1892.42, up 13.95. It has made leg C. So it's very interesting that the E-minis are lagging. So I'm going with the S&P cash. Now, 1897.29 starts leg C in the weekly chart. Now I can start summing things up. No, let me just run the numbers. The Dow is up 98 at 16,681. The S&P is up almost 14 at 1892. The comp index is trading right now, COMPX, is trading up at 4130, up 58 points. It's got quite a bit of a way to go to establish some kind of a new buy mode, let's put it that way. But in the meantime, I'm going to go to the Qs because a lot of people trade the Qs. The Qs have a much better format that I can look at here in the daily. And the Qs at 87.91 need to get to 88.22. And the high today so far, 88.03. 88.22 will start leg C. If you're looking at the 120-minute charts of all of these different indexes, this is leg B. In the Qs, the INDU is in leg C. The SPX 120-minute chart is in leg C. Now gold. Gold had a very nice move earlier on, started off kind of negative last night, and all of a sudden it moved higher. What's important about the gold, GCM, I'm still on the June contract. Don't type it there. Type it into the little box over there. GCM 14 is that this is a leg B, and it's not a B plus, that should just be a B. And I don't know if this is a leg failure. I believe it's probably going to fail. That's the daily chart. The daily chart is just in the middle of a trading range, making it yet another M or an H formation, lowercase h. So I'm watching this real closely. I move into the 13. It's at 1298, up 1060. If gold happens to go to 1315 by, say, Wednesday, that'll be good. And say you can test the 1325 200 period exponential moving average again. Just don't fail under 1280, 1278 support, because that'll be very negative for gold. I think it's actually going to do that. That's just thinking. We'll see which level. We have no position in my opening call. That's my daily service for my subscribers. Now, this is very interesting because the dollar had a spectacular move on Friday, spectacular for the dollar, that is. Just hasn't been able to follow through, and that's the reason why I'm anticipating that the dollar is going to just be in the trading range. I think gold and dollar in trading ranges right now. I'll change my viewpoint if the dollar, C1, C2, if the dollar is able to break into the 80.20 to the 18.45 area in the next 2-3 days. That'll be impressive. That would say to me, aha, finally the dollar's got some legs to it. Gold should be pulling back. High-grade copper last night was impressing me. I haven't looked at it this morning. High-grade copper has gone to a very strong leg. Is this an E or is this a B? I don't know yet because it's a very strong move. I'm going to give it E/B connotation in the daily. The weekly is in leg C. This is good action. I like it. I have to tell you something, that copper is going to be an important ingredient in this whole mix as we get into the end of this week, because it'll be mid-May, giving copper enough time in the monthly chart to say, hey, are you finally showing some support in the weekly that's translating into the monthly? And what do I mean by that? I mean that if copper at some point in the next, this is Monday, if copper is able to break, it doesn't even have to close. It just has to try for 3.2040. Right now, the continuous contract's at 3.14. It shouldn't be much if it's really strong. And if it does that, that really improves the monthly chart. Doesn't matter where it closes, just the fact that it can get there shows there's some kind of internal strength. So that's that. What am I missing? Bonds. Big question about bonds. Well, the bonds are very interesting because I did some work last night. I'm going to explain what I did. Once again, I've got an alternate wave count in the Chapman wave. All that means is because I'm not trading it, I have the leeway of being a theoretician and saying, hey, if this happens, such and such should be the trend. If this happens, such and such should be the trend. And what I'm looking at here is that there really was a down arrow with a peak G. So far, there's nothing that denies me the fact that this is almost certainly, you can't put almost and certainly in the same sentence. I am. Almost certainly a peak G at 113.10. Really nice move in the TLT, taking a break. And the break says, as I said to my subscribers this morning, that the 110.30s should be support for the TLT. If that gets taken out and there's a slide underneath 110.04, that's going to say that this rally in bonds, this decline in yields, at least for the moment, is possibly over. Now, I don't want to take too much time, but I do need to mention that you've got the monthly chart. It's really leg C. Is it really leg C? No. No, it's a leg D. I'm going to get back to the monthly chart. I'd like to go to our first caller. We've got Bill in Boca Raton, Florida. Hi, Bill. How are you?
I'm doing fine. How are you, Basil?
I'm well, thank you.
Thank you. I'm looking at Under Armour, UA.
Okay. Do you have a position in it?
A couple of weeks ago, there was a huge volume spike of 40 million shares. It usually trades about 1.2 million a day. And but it hasn't come out of the channel yet, so I'm just wondering about where would be a good entry point, or whether you should just jump on the bandwagon.
So you don't have anything right now. Your question is, you're thinking of a long position?
Yes.
Okay. I'll be right back.
Or at least do a covered call on it.
Okay. I'll be back with Bull in a moment.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, the Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Investors, Taz Market Research delivers to its subscribers expert commentary on the analysis of 15 different markets each day. Get this invaluable and timely information through the daily market research videos Taz Market Research produces each day before 9 a.m. The video analysis will include reports on currencies, interest rates, indices, metals, energies, grains, and more. You'll be able to gauge where high profitability setups are in each of the markets. Receive a free 2-week trial subscription to Taz Market Research videos on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pezzamento, Andy Hecht, Victor Jones, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing. Basil takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Now, folks, we're back. And in fact, we are looking with Bill in Boca Raton, Florida. We're looking at UA, which is Under Armour, trading at 40.70, up $1.91. Here's what I'm looking at, Bill. There are a couple of things. When I see this pattern that says the resistance from the last bounce was met with selling, and the pullback that occurred was, now just explain to me, do you know why, was there a stock split?
No, I don't believe so.
Why have I got my letters way up here and the price is down here? That usually happens either in a breakup of the company or a stock split. So, yeah, split. Okay, someone in the den said, Pete said, yes, there was a split. Okay, the letters don't change, but it's important to know because it made a peak F in the monthly chart. And everything about it says that it must have been a split. So I'll have to take a little time. And what I normally do is I don't lower the letters, I just redo it. It's easier and quicker to do that. Now, what's really important about the doji candle that I saw at the top that said to me that there's a good chance when I was on air, I remember saying it's a good chance that Under Armour and Whole Foods and a whole bunch of other stocks that had done beautifully in the major move up from 2012, especially 2013. We're taking a rest that could be translated to an intermediate term top, is that the MACD and stochastic, even in the weekly, pull back really sharply. But when I see this particular pattern in the daily, which I managed to quickly do a whole bunch of notation on, what I do is the gap that formed back on the 30th when it gapped up with a low of 48 round number and a high of 53.33. That 48 round number low just the previous day on the 29th of January, previous session, was a high of 43.77. So that is 4.5, almost 5 point gap, and that was partially filled by the recent move down. The candle I'm going to make two suggestions here, and both of them are, how can I put it? Let me just show you the chart pattern. If you're looking at Tiger TV, or if you're looking at, if you can see my charts, you'll see that the 200 period moving average has been really important as support, and it held it perfectly 3 times since about the 22nd or 3rd of May. But what's really important, of April into May. Now, what's really important about this, the last move up created also an arch at a trough C, and that was the low of the 7th of April at 50.33. Bounces up to the 9-period moving average, pulls back, retests successfully, goes slightly higher but cannot hold it, and goes to a leg B and then fails on the 23rd of April and breaks to a new low. Now it's starting to flatten out. In my CD introducing the Chapman Wave methodology, I talk about the scallops, these lowercase h patterns that at a certain point start to go sideways, can go to an M pattern, the lowercase m, and then what happens is that's where you should get the largest arch formation, or even a successful test that takes it to basically like a breakout with a double bottom. I'm in the camp right now that would say that there's a chance that it could bounce, and it could bounce a little higher than the high of the 1st of May, and that was at 50.33. That's 2.25 points. It's a 5% move. But I'm also saying there's a really good chance that this week I probably will finally get that leg D in the S&P, and that's where I've got to become quite a bit more cautious. Well, I can't say a bit more cautious because we only have long positions right now, which was had for a little while. We even added today some long positions. So even the long positions, I have to be thinking of them as shorter term, because if we do get some kind of a signal a little later in the week by Wednesday or Thursday, perhaps before options expiration Friday, making this a potentially fabulous reversal day for Friday, I would only treat this as a shorter term trade. So that's the reason why I wanted to give you a little bit of a background of what I'm looking at. That's number one. Number two is, if it rallies from 48.59 to 50 to test the 50.33 high, that would be best on a percentage terms probably early this morning to get calls, if it was just calls. But yeah, I'm going to leave the actual trade to you in the options, because you have a really good handle on the way you like to trade these. What I am saying, a chunk of the gap has been filled. I'm suspecting that there's an oversold rally. The really, really big thing about coming up, and I wanted this to be part of my market overview, and I'm going to include it, is that can you hold on a moment?
Sure.
Okay, because I wanted to finish this thought, because you might be in a good position, but we won't know until Thursday or Friday. So, folks, I'll be back. The Dow's up 96, S&P's up 14. Be back with Bob. We're looking at UA, which is Under Armour. What should we do?
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Andy Heck's powerful weekly newsletter, the Technomental Commodity Report, has delivered multiple triple-digit winning trades in recent months. And right now's the perfect time to get a full month-long trial to Andy's newsletter with no obligation to pay anything. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $59 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or Tiger TV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole's gone sideways, the way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. This segment is brought to you by Harmony Gold. For more information, just click the Harmony Gold banner on the front page of TFNN.com.
So, folks, we are back, and we're back with Bill and Boca Raton. I just want to finish up here now. Just the pattern I'm looking at that would be a successful pattern, Bill, if you go to FLT, which is Fleet Core Technologies, I was just asked about that in the den, you'll see that the lows that were made in mid-April to late April had the H, lowercase h, that goes to a successful M pattern holding the 200-period moving average, and then a sharp breakout above all those arch highs. That's what we need to look for. I don't, from the pattern I'm looking at, it's not quite the same, not yet anyway. So here's my recommendation. If you're able to use your call positions, then I would use it on a rotational basis. In other words, I would set one up. I would start now. If there was a bit of a pull, just a small pullback of about 50 cents tomorrow at the opening, or 75 cents, I would add another small position, and then I would start to raise the stop on the position using the stock price itself, because if it takes out, what did I say? It was 49. I keep doing this. Sorry about that. If it takes out 50.33, then what I would do on one of my positions, I just keep raising it, and I try to keep part of the original option that you're getting right now, keep that as a core position, And let's see if that is able in the 120-minute chart. I'll just quickly do that and then go to the next callers. Yeah, this is only leg C in the 120-minute chart. So if it can get to the D, then I would start saying, okay, maybe it's time to at least take some profit, keep a core position, and just keep treating it as a trade. And the reason why I suggest trying your best to keep a core position is there's just the chance that it's the momentum stocks take over while later in the week the big caps start to pull back.
Great.
Okay, I hope that helps you.
Greatly. Thank you.
Thank you very much for calling. I appreciate that. And I'm going to go right on to Dee Dee in Bethesda, Maryland. Hi, Dee Dee. How are you?
Thank you so much for taking my call, Mr. Chapman. Good morning.
Well, good morning.
Can you help me look at the XONE, X-ray O-N-E?
Okay.
Yes, I own it.
You have it. Do you have it higher up or lower down?
High up.
Okay.
A lot high up. 36. Yeah.
You have it at about 36?
36, 76, something like that.
Okay. So here, this is what I'm going to say to you. XONE is the X1 company. That was brought to our attention by Dave White a long time ago. I believe it's one of the 3D companies. So DD, the stock you got to watch for is DDD. That's 3Ds. That's the 3D systems. That had a terrible decline. So it is not acting anywhere close as well as XONE. And the other one is SSYS, just so that you know what's in the category. Also acting very poorly. So XONE is the one that actually has had the best move in the daily chart so far. Now, I don't know if you know my technique. My technique says look for the lowest low bar. This is the 24.34 low bar of the 15th. And then when it rallies, expect 4 higher peaks. That's the ultimate, which is exactly what happened. It went to another doji from the bottom doji, went to a doji at the top at 37.80. So now you had your first opportunity, second opportunity to get out at break even or just a little bit of a profit. So because of that, I'm going to suggest to you, see today, the general market is up very nicely. And you've got the lagging indexes like the IWM, that's the Russell 2000, having a very nice percentage move today. You've got the QQQ, that's the NASDAQ, having a very nice percentage, not as good, but up 1.31%. The other one was up 2%. And your stock is down. You don't like it, and I don't like it, except you've got the stock. Now, I'm going to treat this completely differently to the way I would normally do things. If you call me and said, should I buy it or should I sell it? I would have said to you, and this is a very important thing to do with your own stocks. When it gapped down on Friday, you should have been saying to yourself, do I want to buy it or do I want to sell it? That is really important, because if you want to buy it, that's a completely different mentality. It's a different way of thinking than if you really want to sell it or if you want to short it. At this particular point, because one of the techniques, I don't know if you use this, but I use the MACD. You've heard of the MACD, the Moving Average Convergence Divergence, MACD? Okay, so that's one of the technical tools I use, a set of moving averages. So far, it's acting quite nicely. But the stochastic is acting lousy, and the weekly chart is acting not very well at all. So I don't want you just to jump out and just do this because I'm talking to you about it, but this is, you asked me my opinion, and here's my opinion. Yes. I don't like the way it's acting.
Yes.
I don't like the way it acted on the way down. You got it, and you thought you were getting it. You bought it just recently at the 36 area, right? You didn't go all the way to 70 and back again, did you?
No, I bought it just recently, like last week, sometime back.
Yeah, you see, when you bought it, you were thinking that it was at the lows and it should have a decent bounce, right?
Yeah.
So I want to make two things very important to you. One is, if you are looking for a position that is going to give you a bounce, and instead of going up 2 points, it falls 4 points or 3 points or 4 points, that's the wrong way. So immediately, I personally would say, I want to get out of some of my position. That's just the way I would. You ask my opinion? My opinion is to take something off, maybe 1/3 of your position, and say, look, I can make up a small percentage. It'll be, it's 10%. 10% is really, in this kind of market, you can make up 10%. But if this goes back down and it goes to 15 or 20%, not only is that really tough to make up, but it's in your head, it's just your thinking, and you start looking at the stock every hour of the day, and it's not doing what you want. You know what I mean, right?
Yes.
So I'm just going to suggest to you, I want to pick up the 120-minute chart because, yeah, it's just I'm not getting good support there. Okay. I'm going to be very, very, very straightforward with you. I'm going to make the suggestion that you take at least some of it off, right?
Yeah, right now.
Yeah, I would, not the whole thing. If you don't want to take the whole thing, just at least make sure you're not there if this thing drops back down to 29 or 26 or 24, because it's done it before.
So I call you.
You know what I'm saying? It's just, I don't want you to lose money, but I don't want you to lose more money.
Yes.
So that's number one. Number two is, I'd give it a day or two, because maybe tomorrow, if the market pulls back, maybe this one actually starts to rally a little bit. And I don't want you to be out of it if it's going to rally back to 34.5 or 35, where you could get out with a much
better, yeah,
a better position. So at least take something off now. Yes. Let's see how it does tomorrow. Call me again on Wednesday, and we'll look at it. But I can tell you this, Dee, if this thing, if XONE, X1, goes under 30.52, that was the low of just a week or so ago, I think it's going to go back much lower.
Oh, I see. Okay.
You see, you can always make up the money, but not if it sits there and it's 15% and then it turns into 20%. That's really hard to make up, because it's the mental thing. It's not that you couldn't do it. It's just, it sits in your head. Yeah. So I personally, I like to clean out. I make a mistake, I just start fresh. I have no problem. We had a stock in my opening call in my daily service last week, which I did all the work. I did everything. I think I did it all correct. And then out of the blue on Friday, it pulls back a little more than I wanted. So we got stopped out. And today it gaps way back up, and it's doing exactly what I wanted. You know, what can I say? I did my best, and the stock didn't listen, and today it's listening, but we're not in it. So there are plenty of stocks. You know, Tom O'Brien always says, there's always another stock. So I think you've got to say to yourself, there's always another stock. So I'm going to suggest, don't get trapped in the stock, because it's going to mess you up for your other trades.
I call you to your opinion, because you're good. Very good on, tell the stock.
Well, thank you very much. But let me tell you, Dee, that if this thing starts to break down again, because the stock 3D systems, the symbol is DDD, it's holding okay, but boy, it really does. The monthly chart doesn't look good. And SSYS, which is systems, what is it? This is called, I should remember it by now. Stratus Systems, Stratus Inc. That's another one, and it's not holding very well. So if the sector is not looking good, that could trap you. I don't want you to be trapped. So why don't we do that as I discussed it with you, and tell me how it goes. Give me a call later in the week, and let's see what's happening, okay?
The earnings coming up on Wednesday, I believe, on the 14th. At the end
that makes it even more difficult on Wednesday, huh?
On Wednesday and the 14th, but after the market, no.
So that's the 14th into the 15th. You see, the chart itself says that it doesn't look like the earnings are going to be good, but you never know. I mean, it could suddenly pop. Okay, I feel comfortable with what I discussed with you. Take something off now. let's look at it again Wednesday before the earnings come out. Let's see how it's doing. If it bounces nicely, we could have a different plan. Okay?
Appreciate that so much. Can you help me? SPLK, I did not own it. SPLK.
Splunk, right?
Yeah.
Yeah, Splunk Inc. Went to a C minus pullback. See, it's the same kind of chart pattern. It's holding the 200-period moving average in the weekly chart. The daily chart says if you want to buy it, now is the best risk reward. It's at 48, SPLK trading at 48.20, up $1.70. It's nice action today. It's up 3.4%. But the stochastic is flat, and it's not showing any internal signs. If you were to touch, you see, okay, I need to talk to you about something else. Didi, you like these high-flying stocks, right?
Not really, but...
No? All right, well, you've chosen two right here. So what I'm going to do is I'm going to suggest to you, while you're in the losing position on XONE, be careful with this kind of stock. Normally, I would have said to you, if you just called me and said, I'm looking at SPLK, I would say, you know what? You could get a very nice bounce of about another 3-4 points, get a small position, and if it goes above 49.75, raise your stop on that position, and let's at least half of the position, and let's see how high it goes, because you've got a nice risk reward right now. But I don't. What if I say yes at 48.18? Tomorrow the market pulls back, and this thing's at 47.18. Now you've got two positions that are not doing well. So I would say for a bounce, you could get a small position, but I'm going to suggest to you, let's see how you can handle XONE first.
Okay.
And then your mind will be, you know what I'm saying? Then your mind is clear. You're not worrying about two things at the same time. How about that, okay?
Okay, I appreciate that so much. Thank you. I really appreciate it.
And I'm sorry it's going down, but let's see how it comes out, Didi. I think you have a chance of a bounce at least. Thank you for calling.
Thank you so much. Have a wonderful day. Thanks.
You too. Thank you very much. So, folks, this is really important. I spent so much time on the market. I did for my subscribers. I need to just remind subscribers. Remember, subscribers, I've started now doing what I always do, except I could never understand, since I finished almost all my daily chart and even the weekly charts for Monday on Saturday morning, or by Saturday, at least by Sunday. Now I've started to send those charts out to my site so that you have the weekend, or at least Sunday night, to peruse them and see what's working, how things are, what I'm expecting, analyze it, criticize it, make your own critique, do whatever it is, but it gives you some time. So in that context, what I did is I gave you subscribers a bunch of charts, and I said, these are the charts, and this is what I'm expecting. And that because there's a leg C up in the diamonds, Dow diamonds, not the Dow yet, that was on Friday, and at Friday's close, and the New York Stock Exchange, the very important New York Stock Exchange, I said to you, that tells me that we should go to a leg C this week, number one. Number two, it says, if there is a C, based on my methodology, and I'll just go to the NYA right now, NYA.X, I should expect that there's also going to be a D, and I'd already drawn in the NYA, you knew that from before, I've drawn in that rising W formation. Now we've gone to the leg C. So we've got a break coming up. I'll be back. I'll discuss a little bit more because the New York Stock Exchange is in leg D in the daily chart. I'll be back. Basil Chapman, Dow's up 103, S&P's up 15. I'll be right back.
You take a hands-on approach to managing your investments. And whether you're bullish or bearish on U.S. Treasuries, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foresight Fund Services, LLC.
Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com. Eastern legend tells of a fair maiden who was offered a rare gift by the king of the land, a bag of pearls. The king promised that she could keep the largest, most perfect pearl she could find with these 3 conditions. 1, choose only 1 pearl. 2, remove 1 pearl at a time, accept or reject it. And 3, if rejected, it would be lost forever. She began by looking at the pearls, passing on many special treasures. She delved deeper into the bag, and soon the pearls were replaced with pebbles. Sadly, she went home empty-handed. Folks, replace pearls with time, because we cannot go back even 2 seconds. We live in the eternal moment of now. So when now are you going to take advantage of my offer to you, a subscription to my daily investment newsletter service, Mastering Probability, where you can experience the most incredible pearls for trading and investing, the Rhodes Momentum Indicator and Strategy. The offer? It gets better. A 30-day money-back guarantee. Don't go home empty-handed. Mastering Probability. Available on the homepage of TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This segment is brought to you by BackTech Environmental. For more information, just click the BackTech banner on the front page of TFNN.com.
Hi folks, we're back, and of course I completely forgot about what I was talking about because I've already had 3 iterations of these ideas through the break with the Tigers and the Den giving me some information. Yeah, the S&P is in leg D. In the daily, let me just double check SPX.X. The SPX is leg C in the daily, in leg C, peak C in the weekly, and will be at D if there is a push above 1897.28, and so far the high today is 1893.81. 1897.28, so it's going to be 4 points, 3 3/4 points to make that leg D. Most importantly, when you're looking at these wave counts, if you look at the Dow Diamonds are in leg D in the daily, but the weekly is in leg C. Finally, you've got the Dow catching up, INDU, and the Dow is in leg E in the daily, but it is also now in leg C in the weekly because the diamonds went there quicker. So this is, we're aligning quite well, but I'm still just thinking about this in terms of, so that's E, in the daily of the Dow. Let me just check here what's going on. I just need to check over here before we go to our final break of this hour. Daily, up D. Why have we got E? Oh, because that was D. All right, there it is. Phew. I got to keep up all these different charts. Should do it automatically. Okay. Yep. Okay. So this is now leg E in the day. I finally got everything organized. And so, okay, here we go. Summary. And then what I will do is I'll prepare because I'll be doing Larry's show straight after this. So let me just go through these one at a time. EUR USD. The euro dollar had a peak E, a major sell-off, went to 1.3992. And what I'd say when I had an email from one of our tigers who want to know what's going on, I said that the 200-period exponential moving average is held, and we're going to see if it can hold it further. Well, it turns out that it couldn't hold the 200-period moving average. It did for 3 bars. Then it broke under it. The magnet turned into a repellent line, and it did a 1-to-1 to the downside. Now it's flattening out, and what's really important about this is look at the dollar. The dollar index went to a peak C1, C2 in the 120-minute chart. Tried to rally today. It's doing okay, but the dollar... There's no real time to waste. If you're going to do something, dollar, you got to move really quickly. You got to get to at 79.88. Let me just quickly do this. This is the June contract at 79.94. Oh, it did go to new high. ABC, almost a D in the 120-minute chart. But you want to see the dollar, the June dollar future contract pushing quickly to the 1820s or higher as the euro pulls back even further. The USD JPY, which is the euro-dollar currency pair, has gone to a leg ABC. It's in leg D, just above the 120-minute chart, acting quite nicely. But if you look at the weekly chart, it's just hanging around in this oval pattern. So trading range. So just to sum up, for those of you who aren't able to stay for the next show that I'll be doing, Larry's show today, I'm sitting in for him. The Dow has gone to a leg E in the daily chart. And that's really important. Why? Because it's starting to tackle, let me just show you something that's very interesting here. It's starting to tackle an area that, in fact, right there was tremendous resistance. The whole 16,600 area, lower 16,600 area has been tremendous resistance. You've got the pattern that I call, there's the leg, there's the body, potential stalk leg formation, and it's broken out. You should see a pullback back to the 16,500, 400 level if there is a turn down later this week. So I'll be back and I'll be discussing it all in the next hour. So stay tuned. Otherwise, have a great day, and I'll be back.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
This is TFNN.